Hello folks, I've been doing some DD this weekend on Ciso, so I come with more precise information. I have a more clear view on the situation and I will try to summarize here. So, the 10th of December 2024, the company announced that they plan to delete high interest debt by issuing convertible. Basically, the numbers are not very clear. We are talking about like 15 to 20 million shares, because maybe the debt didn't convert all the shares. They sell some. I think he has been selling from 15 to 20 million shares. On the 27 million is allowed to sell. Whatever, that's not the important point. But basically, the company passed from, at 11 to 20 million shares float, with 50% in the hand of insiders. So it was very difficult to trade Ciso back in time because there was very few shares available. That's why you see so few insiders, institution, into this, because there was not enough shares available. If you pull out the insiders plus the retail, it was very difficult to take a big position on Ciso. So what happened? The 10th of December they announced this convertible note. Then we have a run who bring the price to 384 at the end of the year. Then we see a fall down. That was the market maker, knowing the information, who begin to short the company in anticipating the selling of the shares that happened in the month of March. If you go back in the month of March, you may see that there was a three-wave of selling on high volume of X million shares. Nobody really know. What we know is that today we have 32 million shares total float, with the insiders owning, difficult to say, 5 to 15 million shares, something like that. So there is more shares available now. So the stock will be more tradable than back in time. But what you need to remember is that if we are talking about the float, the company have been going from roughly 10 million shares to 30 million shares. So it's a difference. And naturally, normally it's not a good news. But the good news is what? Now the company have no more high interest debt. That means that every quarter they will not have all this weight on their shoulder pushing the results down, because they need to repay that debt. That's over. That's behind us. Plus, they get rid of Latin American operation, or was a low margins operation. That's out of the way too. And now they are focusing on high margins activity in the software sector. Margins are, we are talking about margins of 25% instead of 9%. And that's a big difference, especially for a big company, because that's give a big relief when you have less debt and more margins. That change the whole picture. So now, what happened? If you go deep, like I've been going this weekend, basically, the short have covered a lot of shares the day we run on 66 million in volume. And the price have been going from 60 cents to $1. From there was a kind of anomaly, Because when you have this kind of run fueled by shorts, after that you have some kind of dump. Why? Because the short reshort at the price was a lot higher from where they cover, plus the retail are cashing in the profits. A lot of retail have been buying at 30, 40, 50 cents, and naturally when you see $1, you are tempted to sell. But that didn't really happen. That's the strange part of the story. 3 or 4 days after the 66 million shares in volume, we see a spike to $1.5 per share on 8 million in volume. And that was after this run. So it was a kind of overextended. What the RSI was sky high. It was overextended. And I think that a lot of retail have been trapped there, basically buying from $1.10 to $1.5. After that, several days of low volume, with the price don't really crawling down, 1.3, 1.4, 1.5. We even see a spike at 1.7. So another anomaly. So all this anomaly have been, in my humble opinion, cleaned up last Friday with this big dump from 1.4 to 66 cents, and then directly a rebound to 83 cents, because the stock have not been trading normally. I repeat, normally when you have a big run on high volume, and 66 million on this kind of float is a lot of volume. To give you an example, MVST, who have like 300 million shares running around, have been running from 40 cents to $1 on 1 billion in volume. So it's roughly, three times the float. And from there, we crawl down to 50 cents, and then, going back up until a few days ago at $4. So what happened here, to make you understand, is that the company is transforming itself. It's not the same company. Back in time, in 2024, they got high debt, low margins operation, and now they have more shares. That's the point. Yeah, there is more shares, but the book are a lot cleaner. And as you know, the market don't like uncertainty. And now we have a more clear view of what's going on. Basically, they announce $40 million in sales for this year. They have 32 million shares out, with a lot of these shares in the hand of insiders, very few institutions, and a lot of retail. So retail, that's mean that all depends what kind of investor we attract here. If we only have flippers who buy at 80 cents and sell at $1.02 and rebuy at 90 cents and sell at $1.03, we may go sideways for a few times. Let's be honest and clear. If we have people who understand that Ciso is transforming itself from low margins, high debt company to a high margin, low debt company, and that the whole picture is changing, people will understand that the fair value, and that's my numbers, fair value, fair mean kind of minimum, in my humble opinion, it's around $1.5 per share. And real value, if you compare, for example, to Sentinel, ticker S, it's more around $7 per share. Okay, so now we have to build a plan from the fair value to the real value. No doubt in my mind that 80 cents is a crazy bargain. That's for sure. If you can buy Monday, I don't know what will be the opening price. What I see happening, it's some kind of fight around 96 cents, and then a kind of stabilization from $1 to $1.10, and from there, building a base. Then they will come with the news that they are compliant with the Nasdaq because they have been trading 15 days above $1, and who knows what happened? News, buyback, I don't know. But I need to do this audio to explain to you the situation, because naturally there is no free lunch. You all know that, and everything happened for a reason. The reason here for all this mess since December until a few days ago is that the company is transforming itself from a high debt, I repeat, from a high debt, high percentage debt, low margins activity to a company with low debt and high margins activity. 25% are good margins, very good margins in the market. And the CEO was clear in the interview, they don't want activity that give them 9% margins. They don't want to go with that. They want to focus on the activity that give them 25% margins. So expecting 40 million in sales with low debt and this kind of margins changed the whole picture. And with the numbers we have in our hands, in my humble opinion, this stock will be trading normally between 1.5 to $3-4, but we don't really know what kind of news or new contract or buyback they may implement that will bring the price to the real value is more around $7. Anyway, the only thing you need to remember is that 80-90 cents is a great entry price. Personally, I regret that I didn't act back in the 50-60 cents area, but at that time the chart didn't look like today, so it was not the same. Sometimes you are stuck in a trade for months because it's a bargain, but stay a bargain. Here we see there is some kind of movement. The fact that short have been covering a lot mean that they don't believe that this company will go under $1 in the future to come. The fact that the company depends a lot in retail, and the fact that so few retail are talking about Ciso mean that the best is ahead of us. Because actually, I think on Stock Tweets you have only 4K members with maybe 20 or 30 very active. That's very low, if you compare with Clove, 85K members on Stock Tweets, or Neo, 350,000 members, 4,000, that means it's still completely under the radar. So the fact that the retail have a lot to do with the price mean that if there is some kind of movement, and I think that after this run on 66 million volume, the fact that we don't really see a big dump after that, I think it's because the retail who are investing in Ciso, they have made some DD and they are long-term buyers. Because if it was only, day traders, after the stock run from 60 cents to $1, you will have seen that the day after going back to 60 cents. And that didn't happen. That's why Friday they organized this short attack, because retail are strong over here. They are very strong. I'm unfamiliar with that. Normally, a penny stock will run from 60 cents to $1, you have a dump. That's logical, you always see that. So, at a certain point, we are going to attract flippers. That's for sure. And you must be careful, because we may see the stock going too high too quick. Like what happened a few days ago when we touched 1.7, it was too high too quick. RSI was sky high. So what's going on right now is very good for long-term holder, because we are cleaning the book, cleaning the chart, and cleaning the kind of traders we attract. Actually, a lot of people are talking trash on Ciso. All the day traders that have been buying at 1.4, 1.5, 1.6, they are super angry. They have lost 50% of the investment. So, nobody will look at Ciso until we trade like at $2. It will be between insiders who don't sell and retail who are accumulating. The fact that I was able to buy, it was because I say, okay, Ciso touching 1.7, available at $1, let me buy. I didn't expect the dump, that bring us down, because that was an anomaly. So when the dust will come down, that may take a week. When the dust will come down, I expect to see Ciso stabilizing between 1 to 150, building a base and waiting for news, compliance with the Nasdaq, buyback, change in the CUSIP numbers, who knows. And that's very good for the stock. If we were running to $2 now, we will be with the RSI at 80%, too high. Now the RSI have cool off. We are under 40. That's very good. I think Monday we are going to stabilize around $1.10, and from there, build a sustainable run that will bring us at the end of the year, or who knows, because depend the news, the volume, the this and that. It will bring us, somewhere around $4, $5, $6, $7 end of the year. I don't really know. What I know is that here is cheap. It's cheap. So, in a market where you see a lot of red, look at CLOV going from 4.8 to 3. Look at EOS going from 7 to 4. Look at NEO going from 5 to 3.5. Big caps, when the tendency is not good, they're not good investment. The best days of MVST are behind us. I think MVST is going to $5, but we are already around 4, so that's a 20-30% run. Ciso coming from 80 cents. If we go, let's give a number. If we go to $3, that's a 3-bagger. That's another story, you see? So I like the turnaround story. I don't say to sell your CLOV, your MVST, your EOS. I think they are fine in the middle term or long term. But actually, I don't think you are going to do money on these big caps. A lot of share running around, a lot of story that need to, to look at Oscar, OSCR. I remember Oscar was a $2 stock, touching $25, 10 bagger, and now 13. Yeah, it's not expensive, 13 for Oscar, but it's a big cap. That means it takes a lot of money to move. It takes a lot of money to move. And even if Oscar go back to $20, that's a 40% run. It's not a three bagger. So I like to have room. And on Ciso, we have room. Especially if they expand the high margins activity, they are compliant and they organize some kind of buyback, find some financing non-dilutive. A lot of things can go well for Ciso. And at this level of price, the risk is not very high. But if everything was for sure, we will all be millionaire. But I'm pretty confident that, I will see at a certain point this year a price, from $2 to $4 and higher with news. So I want to share this information with you. I hope you have a nice weekend. Let's hope Monday we can stabilize around $1, something like that. And don't be greedy or impatient, because we always need to pay for that after. After the run on 66 million in volume, people was greedy. We touch 1.5, we touch 1.7, and look what happened. Big dump. Big dump is not pretty in the trade account. I prefer not to open my trade account. But that means that the runway is cleaner. People are disgusted. They don't look at it. They say, I've been losing money, this and that. That's why they do that. And now we can build on reliable retail who know the story, who know the numbers, who know what's going on, who are going to buy the dips like they were doing Friday, buying at 80 cents, 85 cents. And from there, building a base, sustainable base. And I personally, I have no problem. I really have no problem if we trade at 1.5, 1.6 end of June. I'm okay. I'm okay with that. I know people want $3 end of June. That may happen, but I will feel good, because I want a sustainable run. And all this shakeout, it's difficult to digest, So let's see what happens. But it's very interesting. I know people are going to say, why you are criticizing MVST, CLOV, EOS. No, I'm not criticizing. I think they are good investments, but the best part are behind us. Look at EOS. A lot of people are talking about $15. I think it's possible. But for this kind of stock, with all this share running around, to do a move from 4 to 15, that's mean it's a kind of three bagger. It's difficult. It's very difficult. That will take big news. Enormous news. So don't mix short-term expectation with long-term objective. CLOV, EOS, MVST will be okay. But it's not the same story at 50 cents, at $3-4. It's not the same. It's not the same story. A lot of the good news are priced in. And now you need to have new good news. In the case of Ciso, we are at the beginning of the transformation. So that's why I like it. But it's dangerous. When you are around $1 on a company, it's dangerous. I remember MVST, CLOV, EOS, going bankruptcy, bad, scam, mafia. Yeah, it's possible. That happened. But The market is full of surprise. Look at TMC. 90 cents, mafia, scam, going out of business. Now it's $4. You need to pay 4 times more money for the same amount of shares. Think about it. Take care, friends.